Tyler, we've done a few videos talking about NextEra Energy and NextEra Energy Partners, its subsidiary drop-down financing arm, and some reasons we have concern. And sadly, a lot of those reasons have been proven true over the past month to 6 weeks or so. Instead of doing another video beating up on NextEra Energy, they still have some serious problems with dealing with refinancing debt going forward. Either way, you and I both have some other stocks that we prefer right now for investors, particularly if they're looking for a high yield or looking for stable dividends, focused on renewables. You ready to talk about a couple of companies maybe we like a little bit better right now?
We're gonna do the same thing we always do. You're gonna do a nice company people have heard of, and I'm gonna go deep down into some obscure world. So let's go.
So I'm going to say this. Yours is certainly in the obscure place that Tyler goes in his misfit ways. Mine is, it's still not a household name, but it's got the backing of some pretty big, well-heeled companies that are supporting their efforts. I'm Jason Hall. This is The Smattering. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. Go to fool.com/The Smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. You should definitely check that out after watching this video. Tyler, again, the short version here with the NextEra Energy story. It's been a wonderful growth story over the past 20 years. And even with as much as the stock has come down, the stock has been a wonderful winner for investors over the long term. But if you bought the stock anytime over the past 2 or 3 years, you're not happy. The stock has come down a ton. They've had to revise a lot of their growth targets. Their core business, Florida Power and Lights, seems to be doing fine. Florida's economy is doing good. The demographics are good there. But a big part of its business that it's used to juice returns. It's independent power business. It's non-regulated side, a lot of which has been financed by NextEra Energy Partners, is facing some really tough headwinds with interest rates that have skyrocketed, that have made it far less profitable to develop renewable assets and then drop them down to NextEra Energy Partners. They've basically gutted the growth plans for that business, and the market's reacted by gutting the stock price and bringing it down to more along the valuations that most utilities trade at. I think people are looking for a little bit more, and I know the stock that you want to talk about can definitely offer them a little bit more.
Yeah, so I'm going to go much further north, and we're going to go with Allete, which is a holding subsidiary, fancy different name for Minnesota Power. Minnesota Power is one of the utilities primarily focused in Northeast Minnesota. Doesn't sound like the most exciting place, but one of the things that particular part of the country is very well known for is iron ore mining. And there's some industrial manufacturing there, some upgrading of iron ore to make it suitable for steel. So there is a pretty substantial power demand coming from the industrial side and not necessarily on the residential side that you would see in, let's say, Florida. But one of the things that makes Allete rather intriguing, there's a couple things for me. Number one, if we're talking about renewables, Allete is actually one of the more renewable-based businesses in the country. If you want to talk about the statistic they use, and to be fair, it's the first time I've actually heard anyone use this one before, but on a megawatt of capacity to market cap basis, Allete is the highest in the country for publicly traded utilities, meaning that 53% of its solar and wind capacity as a percent of its market cap. Pretty substantial exposure to the renewable energy industry already. And again, it's a utility. You're not asking a lot, right? You're looking for a business that's going to probably grow somewhere in the mid-single digits ranges, 5 to 7%, which is exactly what Allete is expecting to grow over the next several years. Looking for a decent dividend yield. Allete has that there at right now. They currently trade for a dividend yield of 4.87%. So we're getting close to 5% at a 4.8% dividend now with 5 to 7% growth. On top of that, that's a pretty decent value proposition right now. And Allete appears to have that long-term tailwind of renewable growth and just some other components that you see from publicly traded utilities. Not necessarily the most exciting things, but the important things nonetheless. One of the places that Allete is spending a lot of money right now on is on high voltage transmission lines. One of the things that we know about wind power is you happen to have the Great Plains areas of the United States. North Dakota, Iowa, Nebraska, a lot of these places are much more conducive to wind than a lot of the other places in the country. But to get that wind power to somewhere else, You need a lot of high voltage transmission lines. Minnesota Power, or Allete specifically, is building a lot of those. That's their major capital projects over the next several years, is rather than building a whole lot on the production side, they're looking to connect a lot of people that are building the wind power production facilities in the Great Plains areas. Somebody, I don't know, just happens to be doing a lot of it. Berkshire Hathaway Energy, I don't know.
Right.
Let's just name drop here. So when you have that sort of combination, I know it doesn't sound exciting. Oh, the public utility that only happens to manage Northeast Minnesota. What are you going to do with that? But hey, let's talk about some of the other drivers that we have going on. We've been talking a lot about things like nearshoring. We've been talking a lot about trying to rehouse major industry in the United States with manufacturing. When it comes to things like that, the areas of the Great Lakes region just happens to be one of the most productive places for manufacturing, for the source of iron ore, for the steel, for the construction that's going to happen for all of these things. And it may not have the residential demographic boom, but if we were to see that major tick up in industrial activity, you could see some of that above GDP growth from this region.
This is a good time to be thinking about buying Allete right now. The stock price late September. This also happens to be about the same time NextEra Energy stock fell substantially. So there's an effect on a lot of these smaller, more obscure renewables focused ones. All of those things together, 13 times earnings. The price has become more attractive. I think that's a good one for investors to be thinking about. I'm going to shift a little bit to the side that you talked about with the power producers. I want to talk about Clearway Energy because that's their business. This is a yield co. NextEra Energy Partners, the drop down for NextEra Energy. That's what Clearway Energy does with a little bit of a kicker. The difference is that while NextEra Energy Partners is the finance arm, the drop down arm for the utility, they build it, they finance it, and then they sell it to the yield co. Clearway Energy is a little bit more, they're structured a little bit more to be less just the finance arm. They have two really large backers. Their primary sponsor for a number of years had been Global Infrastructure Partners. About a year and a half ago, Global Infrastructure Partners struck a deal with Total Energies. If you follow this channel, that's another one that you've heard Tyler and I both talk about. Of the super majors in the oil and gas world, the one that's more focused on renewables, this was their biggest deal, $1.2 billion to buy half of Global Infrastructure's stake in Clearway. They also worked a deal with SunPower, where Global Infrastructure took half of Total's SunPower. So what is the point? You have two really big players in infrastructure and global energy and renewables that are now partnered to co-sponsor Clearway Energy. And what did that do? That gave Clearway Energy an even bigger pipeline. You see their pipeline of project types: solar, wind, storage, repowering wind, so taking existing wind assets and repowering them with new, more efficient, larger turbines, and where those projects are in their stage of construction. They have a lot going on. They have 7 gigawatts of late stage projects over the next 4 years. So they have a really strong pipeline. What does that mean? They have some ability to continue growing their dividend and not having to slash their dividend growth profile that we've seen from NextEra Energy Partners. They're basically holding with that 6 to 7% dividend growth as being their plan. You think about where this business is, it's strong. The stock came down, affected a lot, like so many others, by NextEra Energy Partners. You get a dividend yield of about 6.5% right now, and I think it's a very safe 6.5% yield. I think you should put this one on your list as well. I think Clearway Energy really deserves a close look right now.